Hi students, I am from Velavan, Faculty Management, Sastra Deemed University. In GST, now we are going to discuss about Unit 1. In Unit 1, we have to cover introduction and definitions. Okay. First, we have to discuss about the introduction to GST. Introduction to GST. So here you have to know what is GST, what is the tax structure in GST, what is the journey of GST, what is the difference between direct taxes and indirect taxes. So everything will discuss one by one. Okay. Now I will start with introduction. So you know, goods and service tax is an indirect tax. So it is coming under the indirect tax because you know there are two type of tax systems are there. One is direct tax and indirect tax. Income tax is coming under direct tax, but GST is coming under indirect tax. Okay. The manner of levying tax is on concept of value addition tax. So that's why it is addition. When you give, when you give additional value to the product, you have to pay tax only for that additional value. You have to collect tax. You have to collect tax only the additional value of the product from the customers because already you paid tax for the cost of the product. So how much you add more, the tax will be collected only on that part. That's why this is called value added tax. The mechanism for charging a tax based on value addition, okay, can be placed only by using the modality of input tax credit. So here you can claim also input tax. We will discuss what is input tax later in detail. Thus, the value addition taxation and the input tax credit are intertwined concept. You know, they are intertwined concept. Another related concept is that of the supply chain of goods and services. Okay. A supply chain refers a complete flow of goods and services passing through different persons or channels during a cycle when the goods or services are produced and reach the final customers. But usually the cycle will start from manufacturer ends with the consumer. Here consumer is an end point. So we have to collect all GST from consumer. So that's why it is consumption based tax. So we are going to collect, we are going to levy, charge tax only based on the consumption. Okay. The GST liability arises at different point of a given supply chain because in supply chain it will start from manufacturer to consumer. But in between there are so many players are there. One is wholesaler, retailer, both everybody will pay tax for only the value addition, only for value addition. Here when this system was introduced, I think all of you know the GST is a new tax regime. It was introduced in the year 2017. I think 2017. It was introduced by our honorable Prime Minister. But before we were paid so many tax, so many tax. Here this is not a cascading tax. I mean this is not a tax on tax. This is only tax on consumption. But before GST, we followed cascading tax. We paid tax on tax. Tax on tax. Take for example service tax, VAT, excise. We paid so far. Before introduced GST. Okay. The concept of direct and indirect taxes. Tax can be broadly classified into direct taxes and indirect taxes. I mentioned earlier. A direct tax is directly levied on a person who is to bear the burden. So here in direct tax, burden of tax is in the assessor's hand. They have their own burden because they have to pay tax for their income. That's why direct tax is directly levied on a person who is to bear the burden of such tax, while indirect tax is levied on a person who collects such tax from another person. In indirect tax, what we are doing, we collect tax from the customers, then we'll pay to the government. Here, our burden is nothing, but we are the mediator. We have to collect because we are doing business. We registered our business. So once we registered, we can claim ITC, and we have a rights to collect output tax from the government, from the customers. When we collect output tax, this is not our money, this is government money. We have to pay government, we have to pay to the government after adjusting our input tax which we paid earlier in the sense at the time of buying goods. Okay. Direct taxes are usually levied on income or property, while indirect taxes are usually levied on the supply transaction. Supply transaction means consumption of goods. Consumption of goods, because it is consumption based tax, my dear student. Okay. Then here you have to know the difference between direct tax and indirect tax. Because this is very, very important. You have to know the difference between both, because in the exam, the question paper setter will take this question. Compulsorily, this question will come. Okay. You see, now we will see one by one. In direct tax, the payer of tax and sufferer of tax, one and same. You take Mr. X has income, he has to pay tax. Here he has a payer and sufferer, because he is going to pay tax on his own income. Here burden is him, burden is his. He has to pay. His burden is not others' burden. In indirect tax, payer of tax, not sufferer of tax. Payer of tax, not sufferer, because he is not going to pay tax from his own money or from his own pocket. He simply collect money from the customer, then pay. That is impact of one head and the incidence on another head. This is called indirect tax. But here impact and incidence on the same person. The person who earns money or income, he has to pay tax. But here a person who run the business, he collect the tax from the customers, then pay. So here he is a payer only, but who is a sufferer? The payer, that customer, consumers are the sufferer, because they consume the product, they have to pay. Then it is income-based tax. I think indirect tax is an income-based tax. So direct tax. Direct tax is an income-based tax. Indirect tax is supply-based tax. Because in direct tax, we collect tax for their income. But here, we collect tax for our taxable turnover. Okay. Rate of taxes are different from person to person. In indirect tax, there are so many tax rates are applicable. One rate is for individual, another rate is for a company. Take for example, in individual, we follow slab rate, and person also slab rate, company flat rate. So this is the tax system, tax rate system in income tax or direct tax. But here, indirect tax, rate of rate of duties are not different from person to person. Here same, here same, here same. Wherever you go, you buy a product, you have to pay GST at the same rate. Wherever you go to eat food in a hotel, you have to pay tax uniformly. Okay. Then fourth one, entire revenue goes to the central government. But here the revenue source to central as well as state government. But the government, central government collect tax in different manner, because in GST we have to collect three different types. One is CGST, this for central government. SGST, this for state government. And UTGST, Union Territories Goods and Services Tax, this is for union government. But one is IGST, this is for common, both central and state, but it is collected by central government, then the state government portion will be dispersed by the central government later. Previous year income assessed in the assessment year. Usually the current year income will liable to pay tax the next year. But in indirect tax, revenue there is no previous year and assessment year concept. Every year, every accounting year, you have to pay tax. And the sixth one, Central Board of Direct Taxes, CBDT, is an important part of department revenue. But here, Central Board of Indirect Tax and Customs is an important part of department. And the final one, direct tax is progressive in nature. It is in progressive nature, but it is in regressive in nature. In regressive nature. Progressive means the revenue is always increased. The tax rate is also increased. But here we are following only same rate. So these are all the major difference between direct and indirect tax, my dear students. Okay. Then genesis of GST in India. That is very important. It was introduced in the year 2017, but the concept emerged in 2000. 2000 when Prime Minister, when Dr. Manmohan Singh was the Prime Minister, this concept was emerged on his regime, in his tenure. Then later on followed by Honorable Prime Minister Atal Bihari Vajpayee, and it was introduced and implemented by Honorable Prime Minister Narendra Modi ji. Was the regime. So you see, in the year 2000, the Prime Minister mooted the concept of GST and set up a committee to design goods and service tax model for the country, because it's a new system of tax. This is one nation, one tax. One tax, one nation, one administration. This is the beauty, this is the features, this is the advantages of GST. My dear student, this is one tax. Even you buy a goods in Kashmir, or even you buy a goods in all, different state, you have to pay same tax rate. You have to follow same tax system. You need not pay one rate in Andhra, one rate in Karnataka, one rate in Tamil Nadu, another rate in West Bengal, Madhya Pradesh, Manipur, Mizoram, Meghalaya, Naga, nothing. Wherever you go, you buy. You have to pay only one tax. Wherever you go, eat food in a restaurant, you have to pay. You have to pay same tax rate. This is the uniqueness of GST. But before GST, we were paid so many different taxes. They are called subsumed taxes. Taxes we'll discuss later. Okay. So this concept is emerged in the year 2000, and it has traveled long period since 2000 to 2017, and finally our honorable Prime Minister Dr. Narendra Modi introduced this system to the nation on 1/7/2017. And in 2003, the central government formed a task force in fiscal responsibility and budget management, which is 2004, strongly recommended fully registered GST in the national basis. Subsequently, the Union Finance Minister P. Chidambaram, he has rendered enormous and phenomenal role to the economic development of India, or Indian economic development. He also played a vital role to introduce this system, this new tax system. While presenting the Union Budget 2006-7, he announced that GST would be introduced from 1st April 2010. But it was not introduced on 1st 2010 as he announced during the Union Budget 2006-7. But since then, GST missed several deadlines and continue to be shrouded by the clouds of uncertainty. Because it is not an easy task to introduce a new bill in the parliament, because we have a opposition party. We should get opinion from the opposition party. When they will compromise, now only we can introduce all the bills. This is the Indian political system. The talks of usuring it GST, however, gained the momentum in the year 2014, when NDA, National Democratic Alliance government, tabled the Constitution 122nd Amendment Bill 2014 on GST in the Parliament on 19th December 2000. This was a journey. And the Lok Sabha passed the bill on 6th May 2015 and Rajya Sabha on 3rd August 2016. Subsequent to ratification of the bill by more than 50% of the state, the Constitution Bill 2014 received the assent of the President on 8th September 2016, and become the Constitution 101, First Amendment Act 2016, which was paved with the way for introducing the GST in India. So this is the journey. This was the journey. In the following year, 2017, March 2017, the GST legislations, Central Goods and Service Tax Bill 2017, Integrated Goods and Service Tax 2017, Bill Territory Goods and Service Tax Bill 2017, and Goods and Service Tax Compensation to State Bill 2017 were introduced in Lok Sabha. So all the bills were introduced in 2017, my dear student. And Lok Sabha passed the bill on 29th March 2017, and with the receipt of the President assent means acceptance, on 12th April 2017, the bill were enacted. The enactment of the Central Act was followed by the enactment of the state GST law by various state legislatures. Telangana, Rajasthan, Chhattisgarh, Punjab, Goa, Bihar were among the first ones to pass their respective state GST law. By 30th June 2017, all state and union territories had passed their respective GST and the UT-GST Act except Jammu and Kashmir. In GST, my dear friends, we are going to collect three different taxes. This is called tax structure of GST. We'll discuss later one by one. Don't worry. Okay. We are going to collect three different taxes. One is CGST. This is for federal government. The GST and UTGST. GST is for state government and UTGST for union territory. And also, when we transfer or buy goods from one state to another state, this is called interstate transaction. We have to collect IGST, Integrated Goods and Sales Tax. This is collected by the central government, and later on the state government share will be distributed by the central government. You see this diagram, this is the detailed information regarding the journey. So in the year 2000, the concept is emerged, and this concept traveled since 2000 and across 2006. You see the Constitution, 122nd Amendment, and 2014. You see, and 16 and 17. And September 16, and later on 1st July 2017 it was launched. So the credit goes to all prime ministers, not only to Modi ji, all Manmohan Singh, Honorable Prime Minister Manmohan Singh, Atal Bihari Vajpayee, Finance Minister Manmohan Singh, Finance Minister P. Chidambaram, and Arun Jaitley, and Nirmala Sitharaman. The credit goes to all, not only a single person. So this is the new tax. Now we are following one nation, one tax, one administration. This is the beauty of GST. One tax, one nation. In India, we are paying only one tax for consumption of goods. Only one tax for consumption of goods. This is called GST, Goods and Service Tax. Goods and service. There is no any other tax for consumption of goods. Are you paying any other tax other than GST? You think about it. Wherever you go, you buy whatever may be the product. We are paying only one tax. Only one tax. This tax is called GST, my dear student. Okay. Then next, you see, GST is a path-breaking indirect tax reform with the attempt to create a common national market. GST has subsumed, you see, my dear student. Before GST, we were paying different tax like excise duty, service tax, VAT, CST, and central sales tax, luxury tax, entertainment tax, entry tax. What? You tell me. How much we paid earlier? That's why the previous tax regime is called cascading tax. Cascading tax is nothing but what? We paid tax on tax. Not necessary to pay tax on tax. What is the need to pay tax on tax? We have to pay only tax for our consumption. It's enough. Once you pay the consumption tax properly, then our government has a chance to get more money. But previously we paid tax on tax. Now it is eroded completely, my dear students. You see, now there is no cascading tax. Now we are paying only one tax. Only one tax. That's why this is called one nation, one tax, one administration. Only one. One nation, one tax, one administration. VAT and GST are often used. VAT and GST are often used. 1 minute. VAT and GST is often used interchangeably, as the latter denotes comprehensive of VAT by coverage of goods and services. France was the first country to implement VAT GST in 1940. You know, all over the world, they followed, they have GST in their nation based on their laws. But we are following Canadian tax system, my dear students. We are following Canadian system, not American GST, France, Germany, Italy. No, Canada. We are following Canadian model. Presently, more than 160 countries have implemented VAT GST in some form or the other because of this tax has the capacity to raise revenue in the most transparent and natural manner. You see, tax is compulsory. Without collecting tax from the public, how the government gives some facility to the people. Take for example, education facility, road facility, water facility, electricity facility, huh? Hospital, hygienic. How it is possible without collecting money? So it is our sole responsibility. We have to pay tax to the government. Once you pay tax, you feel proud. I am a taxpayer. I am paying tax to the government. I am a taxpayer. I am paying tax. Huh? It's a prestigious activity or action. When you are paying tax, particular income tax, it shows you are earning. You have good income, reasonable income. You are a responsible person. Okay. Most of the countries follow unified. Most of the countries follows unified. You see, unified GST. It is a single tax applicable throughout the country. That's why I told you it's a uniform tax. One nation, one rate. However, in federal politics like Brazil, Canada, the dual GST system is prevalent. They are following. Dual system is GST is levied by both the federal and the state government separately. India has adopted dual GST model because it is a unique federal nature. The dual system is nothing but we are collecting two type of GST. One is CGST. CGST is nothing but Central Goods and Service Tax. This is for central government. Then one more tax we are collecting, state SGST, State Goods and Service Tax. So state goods and service tax goes to the state government. Central goods and service tax goes to the central government. Okay. Concept of GST. Before we proceed with the finer nuances of Indian GST, let us first understand the basic concept of GST, my dear students. GST is a value-added tax levied on supply. Already I told you, this is tax on supply, tax on consumption of goods. This is tax on supply. How much you supply goods or commodities, or how much you provide service to the people, to the consumer, to the customer. Manufacturer or sale of goods or provisions of service, both. Whether you manufacture the goods, you transfer the manufactured goods to your wholesaler or retailer, whatever it may be, or when you provide a service, both are chargeable to tax. GST offers comprehensive and continuous chain of tax credit from the producer point and services and provider point up to the retailer level and consumer level. Already I told you this is chain based tax. This tax system starts with the manufacturer and ends with the consumer. The supplier at each stage is permitted to avail credit of GST, input tax credit paid on purchases and goods and services, and can set off this credit against GST payable on the supply of goods and services to be made by him. Already told you, this is called input tax. Being a seller, you have to buy the product, then you will sell. When you buy the product, at the point of time, you have to pay tax on purchase. This is called input tax. So now you set off this input against the output tax at the time of final settlement. This is also applicable. Since only the value added tax at each stage is taxed under GST, there is no tax on tax or cascading of tax. So I mentioned earlier, GST is not a cascading tax. But before GST, we followed cascading tax system, because before GST we paid tax on tax. Tax on tax. Not now. Now we are paying only one tax. That's why here it is not the cascading tax system. There is no tax on tax and cascading system. Value added tax, this is also called value added tax. Then continuous chain of tax credit, burden by final consumer, no cascading. These are the unique features. Unique features. This is value added tax. How much you add? Further, you have to collect tax only for this value from your customer or from your next person in the supply chain. The continuous chain of the tax credit, everybody, because already you know supply chain start with manufacturer, wholesaler, then retailer, then finally consumer. So this is the final collection point. We have to collect from customers. That's why this is consumption based tax. Okay. Then burden by the final consumer. This is the burden. The no cascading tax. The same can be understood better with the help of the following example. You see, manufacturer, he bought goods. The cost of the goods 1 lakh, he paid 18%. So here this 18% can claim as an input tax. Okay, you see, this is input tax. Then here the distributed paid 1 lakh and he added 11 lakh 12,000. This is value added. So now you collect the tax 18%. So 2016, you see 2016. This will claim as an input tax. Then here cost is 1 lakh 12, profit is 24,000. So now you collect tax from the customer. This is the value added tax. Here you paid 18,000. Here you paid the difference between these two. Here you paid the difference between these two. Then this is the final price. This is what. So you add 18,000, 2016, 4,334. You get 24,451. This is what value add tax. You see, the value addition is 1 lakh here. Here 11,000. You apply 18%. This is the tax you collect. Here 26,000, 4,640 is the value addition. You collect 18%, 4,000. So you see, every stage you have to collect tax only for value addition. They are value addition. You need not collect the tax for this 1 lakh, this 1 lakh, this 1 lakh, 11,000, this 1 lakh, 6,000. Not. So this is a consumer. You won't take this one. So you take all the three. You have to collect tax. This is a starting point. 1 lakh, 11,200, 24,000. This is what the merits of this tax system, my dear students. Hope all of you understand. Okay, good. need for GST in India. You see, deficiencies in the erstwhile value added taxation. In previous tax, we have a lot of deficiencies because no one can predict how much will come through tax. But now this is completely cured. You see, a cure for ill of elsewhere indirect taxes. The erstwhile, I mean, previously we affected a lot. Now we are in safe because every quarter, every year, every quarter, every half year, eh, or every month, the collection, GST collection is increasing. Nearly 1,50,000 crores we are collecting. The government of India is collecting because of GST. So every year, every month it is increasing. Here you have to understand the buying power, the purchasing power of the customers are increasing. Purchasing power is increasing, my dear students. That's why GST is increasing. But the politicians are there, the people have suffered a lot, the people have suffered a lot, the person has suffered a lot. There's no money, no buying power, no, it's wrong. Now our economy, Indian economy is booming. But with a lot of defectives. They have to look at. They have to look at the problems. Where the people are suffering, how the people are suffering. Then, deficiency in the value-added taxation system. But initially, the system was introduced, and later on, some advantages will come. Because all are learning process. But when they introduced 2017, but year on year, some advantages are coming. Advantages are coming. Year on year, the advantages are coming. Certain transactions were subject to double taxation and were taxed as both goods and services. Some transactions only we have to tax both. Okay, I mean double taxation. Since under the earlier regime, distinction between goods and service was often blurred. Okay. Example 1. Under earlier tax regime, software was subject to both service tax and VAT. We paid service tax and also value added tax. This was so because both sale of goods and provisions of services were involved and therefore taxable event under both the status. That is irrespective of value added tax law and service tax law got triggered. This aspect has been taken care under GST law. Here you take now you have to pay only goods and service tax, goods tax or services tax. Here you have to pay only service tax, not tax on goods. Okay. Then you see example 2. Under earlier tax regime, if goods were manufactured for 1,000 and excise duty was payable 12.5% and VAT was payable 14. You see, we have to pay 2 tax for one goods. Suppose you buy a goods or you manufacture goods worth rupees 1,000, you have to pay 2 tax. One is excise duty, another one is VAT. This is called cascading. You see, 1,000 is a cost price. You have to pay excise duty at rate of 12.5. So now total 1,125. You see, here this figure has two. One is cost, one is tax. Now the VAT is charged 1,125. So both. VAT is on goods, VAT is on tax. So here we have to pay 1,285 rupees. This is for how much? 1,000 and 125. Why? That's why this is called cascading tax on tax. Tax on. But now it is completely eroded, my dear. Completely eroded. You need not pay excise duty, VAT separately. Directly you pay GST for rupees 1000. Okay. So, then what? Central value added tax and state levy value added tax were essentially value added taxes set off of one against the credit of another was not possible. And what was central levy and state levy was state levy. There were several taxes in the state, such as luxury tax, entertainment tax, etc., which were not subsumed in the VAT. Okay, previously. Hence, for a single transaction, multiple taxes in multiple form were required to be paid. They are the disadvantages of the previous taxes. So, you think being a customer, how much tax you have to pay? How many times you have to pay? Already the people are struggling lot. Struggling lot. We are living inflating world. Day by day the inflation is increasing. Commodity prices are increasing. You see, my dear student, I spent 400 rupees to buy all the essential things, rice, wheat, all essential commodities to my family in the year 2000. Now I am spending nearly 5,000 rupees for the same product. Because the buying power of the money is reduced. That's why it's called inflation. So people are suffering a lot already. How? Why they have to pay more tax for a same product? That's why the GST came into power. Now we are paying only one. This is called GST. Goods or service. When we buy goods, we have to pay goods tax. When we avail service, we have to pay service. We have to pay service. VAT on goods was not integrated with the tax on services at the state level to remove the cascading effect of service tax. The service sector being the fastest growing sector in the Indian economy. No, take telephone, technology, insurance, banking. They are growing day by day. They are growing fast. So, the components or the collection of service tax is high. Already told you the government proudly says proudly every month our GST collection is increasing. Every month collection is increasing. The last month 1.65 crores, lakhs crores. This month 1.5 lakhs crores. GST was another source of distortion in terms of its cascading nature, and since it was non-backable, being an origin-based tax, GST was also against one of the basic principles of consumption tax. That tax should accrue the jurisdiction where consumption. This is what the features and advantages of GST. You see this chart I have given in detail. Non-inclusion of several local levies in state VAT such as luxury, tax, entertainment. Non-inclusion. Now everybody is taken away. Cascading tax on tax. Levy on non-vatable GST and inclusion of SENVAT in the value for imposing VAT. Nothing. Everything is demolished. No SENVAT after manufacturing stage. Non-integration of VAT and state. Double taxation of certain transaction, both goods and services. Everything is eroded today because we are following one tax, one nation tax, one administration. There is no different administration. The administrator is central government. Administrator is central government. You see, this is the picture I am giving. A cure for ills of existing direct GST goods and services. The crucial piece of India's development strategy. Already told you what is advantage creating one economic India, flip to make India initiative, then unfettered flow of goods and services, then based economic activity to boost employment. After GST, employment opportunities are high. So you see here, this is one nation, one tax, one market, and one administration. This is symbol of GST. One nation, one tax, one market. Okay. Wherever you go, what is GST? First you have to tell, sir, this is one nation, one tax, one market. We are paying only one tax, not in different tax in different states. Wherever you go, being an Indian, wherever you go, we buy a goods in Gujarat, Maharashtra, Punjab, or Kerala, we have to pay the same tax. For all products. The comprehensive tax structure covered both goods and service, like goods and service tax, GST, addresses most of the above states issue. Simultaneous introduction of GST at both center and state levels as integrated taxes on goods and services for the purpose of set off relief and ensure that both cascading everything. Okay. Then next, framework of GST as introduced in India. In India, we are collecting or following dual GST model. Dual GST model. Dual GST means take GST. We have a two, CGST and a GST, and also UTGST. They are the dual, one and two. That's why it is called dual GST model. Because we are collecting two tax. One is for central government, another one is for state government. CGST is for central government, SGST for state government, UTGST for union territory. Take for example, Pondicherry, Andaman, now Ladakh, they have to collect UTGST. Okay. Consequently, center and state simultaneously levy GST. One is CGST, another one is SGST. On taxable supply of goods and services, or both take place with the state or union territory. Union territory is UTGST. State government, SGST. Central government, CGST. Tax is imposed concurrently by the state and central. That is, center and state simultaneously tax on goods and services. Now, the center also has the power to tax on intra-state. This is called IGST. IGST. But it is introduced, now it is introduced all states including Jammu and Kashmir. Jammu and Kashmir. The dual GST, you see, GST common for all states. This is the transaction. Whatever you do, either you supply goods or services, it uh, leads to what? GST. Okay. Then CGST, HGST, UTGST, IGST. Already I told you, we are collecting three different taxes. One is CGST, HGST, and UTGST and IGST. You see, CGST, this is for central government, HGST and UTGST is for state government. When they go for inter state, now we have to collect IGST. You see, CGST, UTGST, HGST, and IGST. So, three tax regime: CGST, HGST, UTGST, and IGST. They are called tax structure, my dear. Okay. Tax structure of GST. The GST law envisages the following type of taxes to be paid depending upon the type of supply. One is CGST, I already told you, tax chargeable for inter-state supply, share of the central. CGST means Central Goods Service Tax. HGST, tax chargeable for intra-state, both are intra-state, share of the state government. HGST for state government. What is intra-state supply? Supply within the state. Take for example, in Tamil Nadu, Chennai to Madurai. Intra-state. In Kerala, Kottayam to Trivandrum. Intra-state. Okay. Then UTGST, Union Territory, chargeable for intra-state supply, share of union territory. IGST, when we go for interstate supply, transfer goods from one state to another state. Tamil Nadu to Andhra, Karnataka to Madhya Pradesh. Likewise. Here, the entire tax collected by the central government, but 50% share of the state is given to the central government based on the back. The final one is GST compensation checks. They are the components of GST, my dear students. So here you have to know clearly this one. CGST, HGST, UTGST, IGST. This is common. This is central government. This is state government share. Both are intrastate. This is union territory. This is also intrastate state. This is interstate. Okay. Then finally GST compensation. Rarely the government has collected GST compensation. So you see, this is the tax system. Here you have to know one thing. Suppose you import goods from foreign. Here also you have to collect IGST. This is state 1. So import goods to one state, IGST. State to state, IGST. between state, within the state, CGST, AGST. State 1 and state 2. Then state 2 union territory, IGST. Within the union territory, CGST. That's. Hope you could understand, my dear students. When you buy goods within the state, when you do the business within the state, when you supply goods within the state, you have to collect CGST, AGST. When you supply goods from one state to another state, IGST. From one state to one union territory, IGST. Foreign to union territory, IGST. You import goods from London, but you are in Pondicherry. Here you have to collect IGST. Okay. Or when you export goods, IGST. Legislative framework. There is a single legislation, CGST Act 2017, for levying CGST. Similarly, union territories without legislation, Andaman, Nicobar Islands, Lakshadweep, Ladakh, Dadra and Nagar Haveli, Daman Diu, and Chandigarh. Chandigarh is are governed by UP GST Act 2017 for levying. You see, they are the union territories in India. Andaman Nicobar, then Lakshadweep, Ladakh, I told you, Dadra and Nagar Haveli and Nagar Haveli and Daman and Diu. Okay. State and union territories with their own legislation, Delhi, Jammu and Kashmir, and Puducherry, Pondicherry have their own GST legislation for HGST. For example, in Ladakh, CGST and UTGST is levied on supply of goods or services because it's a union territory. CGST, HGST. In Delhi, it's a state authority, CGST and HGST. Okay. So there are multiple GST legislations, the basic features of law, such as chargeability, definitions of taxable event and taxable person, classification and valuation of goods and services, procedure for collection and levy of tax, and the like are uniform in all the GST legislation for as feasible. This is necessary to preserve the essence of real tax. Because here we have to follow common tax system. So it is applicable to all state legislature, my dear. And one is very, very important, HSN. So before charge your goods, tax on goods, you have to classify the goods based on the harmonized system of nomenclature, HSN. You have to know the HSN code because all products, they have a separate HSN code. Based on the HSN code will help us to classify the products. Take for example, in sugar, there are so many varieties of sugar, white sugar, Kansari sugar, Kansari sugar, then Karupatti sugar in Tamil. So there are so many variety of sugars are there. So all goods are having a different tax rate. So with the help of HSN code, we have to identify the we have to classify and identify the tax rate. Okay. Then the new scheme of classification of services has been devised wherein the services of various description have been classified under various sections, heading and groups. Each group consists of various service codes. That is what type. The composition scheme, that is very, very important. In GST regime, tax, I think all, is payable by every liable person or every registered person. And in this regard, provisions have been prescribed in the law. So we have to follow the provisions, the rules and regulations. We have to read and understand and follow. However, for providing relief to small business, primarily manufacturers, supplies of food articles, traders, etc., making intra-state supply, a similar method of paying taxes prescribed known as composition. The scope of this scheme has now been extended to small services provider also. When are you going to pay composition levy? The tax rate is very, very less. The tax rate is very, very less. Usually those who are running restaurant business, and they have. We'll discuss what is composition levy, what is the tax rate, who are all eligible to claim or pay tax under composition scheme later. Okay. Then registration. This is one of the important part. Every supplier of goods and services, they have to register their business when they exceed the threshold limit during the previous year. The day when they touch the threshold limit, maybe 20 lakhs or 40 lakhs of its turnover, depends upon the state, they have to register their business. When they registered, now only they are eligible to collect GST as well as claim ITC. This is the advantages of registration. We'll discuss registration separately because once we finish unit 1, we have to discuss registration. It is in unit 2. In unit 2, we'll discuss elaborately. Okay, what are the sections we have to be followed? What are the types of registration? What are the documents they have to maintain or keep at the time of registration? What is the procedures? Okay, everything we'll discuss later one by one. Okay, this is registration. Now see, this is the state we have classified for 10 lakh, 20 lakh and 40 lakh. We'll discuss later because we have to prove Northeast one group and other state one group. Okay, will come based on the threshold limit here. The threshold is 10 lakh, 20 lakh and 20 lakh and 40 lakh. Both goods and services. We'll discuss. We'll come later. We will discuss all elaborately in the registration part. In unit 2. Okay. Exemption. There are some exemptions are available. When you do some listed business, which are listed by the central government as per the GST Act, you may not pay. So what are the exemptions? What are the goods are exempted from GST? What are the services are exempted from GST? We'll discuss elaborately in the exemption part, not now. Seamless flow of credit. That's very, very important. Since GST is a destination-based consumption tax, I already told you, destination. Each destination we have to pay. The end destination is consumer, customer point. The revenue of GST ordinarily occurs to the consuming states. The interstate supply in the exporting state is allowed to set off all credit against IGST payable on. Here there is one payment procedures are there. We will discuss later. You need not worry about that. We will discuss all method of payment, methods of settlement. We will discuss one by one. This is the manner of utilization of GST. You see, we will discuss the same topic in payment of GST also. You see, ITC used. Suppose you have ITC. ITC is nothing but input tax credit. Already you paid tax on your purchase. Now it has to be adjusted against IGST payable. This is a procedure. You see, you have IGST input on IGST. First you adjust output on IGST, then output against GST, then if anything balance is available, you utilize for payment of GST. You have ITC and GGST, first you use GGST payable and you can use IGST. You cannot use any surplus amount available here against GST. Then GST you have first use GST, then IGST, not CGST. This is the manner of utilization. So I hope all of you understand all the concepts clearly. So I will stop this lecture discussion now. So thank you very much for your patient listening. We'll discuss. We meet. Thank you.